Hi guys, my name is Dylan. So recently I saw a discussion online that says that stock investment is similar with property investment. So I would agree to a certain extent, yes, it's the same, but not exactly 100% same. So let's just discuss on the similarity first. So the first similarity will be the potential for appreciation. So for stocks, right, we have blue chips, we have penny stocks. So for these penny stocks, right, generally it means that the price of the shares will be very low and the potential of the capital appreciation will be very high. This is because of the overall valuation for these companies, right, is very low, and also they are lacking of catalysts. So for this kind of penny shares with which is normally maybe 5 cents, 10 cents or 20 cents, right, in order for them to flip or to capital gain, right, 100%, 200%, it's easier because overall the price is very cheap. That is for shares. But for properties, right, it's also the same. Properties that are slightly outskirts, the property price will be cheaper, and if there is infrastructures or new catalysts there, the property price will increase very sharply. But these two investment tools, right, if you're aiming for capital appreciation, we really need some time because we need to wait and hold, as we have to wait for that occasion to happen, and sometimes that occasion never happened. Like example, last time when KLIA2 was meant to build in Rawang, so a lot of these investors had this insider news and went to Rawang and buy property there, but in the end the plan was cancelled and it was shifted to Sepang. So this made the investors lose some of their money, as the property price in Rawang didn't really increase in that area. So always be mindful when talking about flipping or capital appreciating in shares and property as well. It takes time and sometimes it will never happen for that certain company or property. Alright, so the second thing will be income generation method. So income generation method for these two investment tools, right, shares and property, they do provide income, but it's a totally different thing. For shares, we do provide dividends, and for property, we do provide rental. So just one thing to take note is when you are investing in dividend stocks, right, or shares, right, when dividend is being distributed to investors, normally the share price will reduce. So in other words, it means that, example, if today if I invest in ABC shares, right, and it's giving me 5% dividend, but this whole year overall their share price dropped 6%. So in other words, I'm making a loss of 1% when I invest in that particular share. So it means that it's not good and we have to be mindful and calculate the ROI properly. Whereas for property, on the other hand, is different. When I collect rental from my tenants, it won't make my property price lowered. It wouldn't fluctuate generally, and the rental collected will be used to pay off the monthly installment for the bank. So it's two different ways of income generating, and that's why be mindful as well. So the third thing will be hedging against inflation. So hedging against inflation, I mean, when we talk about inflation, right, it's a very negative thing for residents, because generally our goods and services price will be increasing. Example, like when I drink a kopi O in a kopitiam, last time it's around 1 ringgit, but now it's around 2 to 3 ringgit depending on the location that you are at. So inflation has a negative impact towards our daily life, but not for companies and properties or shares of properties. So let's just put it this way: to build a building, I need developers, I need main con, subcon, I need steel, I need sand, I need ID, I need architects. I need a lot of industry in order for the building to be completed. So when inflation really kicks in, right, all of this raw material price will definitely increase, which leads to your property price increasing as well. So if we were to buy that particular property, right, generally it's profiting for this industry, is making a profit, hence your share price and your property price will also increase down the road. So I would say investing in shares or property, it's a hedge against inflation. We need to have that mindset, not to gain a lot in 1 or 2 years, but it's a hedge against inflation if we were to invest in these two items. Alright. So lastly will be the leveraging. Leveraging, like I mentioned in the first video, is something that is a double-edged sword. it can make you rich, it can make you poor as well. Okay, so if you invest in shares, we have leveraging tools like you can leverage it 2 times, 3 times, or 5 times depending on the plan you're investing in. It's a margin account, so be mindful when you're using that because it's very risky. But for property, right, when you leverage, you are leveraging 90% from the bank and maybe sometimes 10%, 8%, 5% from the developers rebate or discounts. So it's 2 different types of leveraging as well, but overall it's still leveraging. We get to leverage when we invest in these 2 investment tools. Alright, so when we talk about the differences, right, I think the very obvious one will be control. When we were to invest in properties, right, let's say I invest in this condo, so I get to decide how the ID of my condo look like. I get to decide who my tenants are. I get to decide the rental rates for my tenants. So I have full control of it. But for investing in shares, right, I cannot be telling the company that I invest in, oh, you don't focus on R&D, you focus on generating sales. I cannot interfere with their daily operations for the shares that I invest in. So it's something that we have to give and take. So it's depending on your risk appetite as well. So the second difference will be market accessibility, right? So for shares, right, I can buy 1 lot, 2 lot, 3 lot, 10 lots depending on how much I'm willing to invest in. Or even if I don't have much money, I can invest in unit trust funds and I can start as low as 100 ringgit. So it's suitable for young adults or even students, university students that wants to start investing early. But for property, on the other hand, it's not the same. Property, we need to be working with a stable income. We need to have down payment if we were to buy a second-hand property and some money for furnishings or some touch-ups here and there. So it requires a more down payment or more money upfront rather than shares. Alright. So the third difference will be liquidity. As we all know, properties are actually illiquid. So it takes around 6 to 7 months. Like today, if I were to list the property on website and I were to sell it today, for a freehold property generally takes around 3 to 4 months, but for a leasehold may take up to 6 to 7 months depending on the state of authority. So if you are in need of cash urgently, property is not really suitable to liquidate. But for shares, it's very liquid. Today, if I were to sell my shares, I can maybe get the money maybe tomorrow or next day or 3 days later, depending on which platform or which country that you invest in. Right? So that's about liquidity. So my take for both of Malaysian shares and Malaysian property, right, generally in 2023 is still rather undervalued, because if we were to compare in the property price per square feet, right, in our KL city centre, it's only going for around 2,000 plus ringgit per square feet. But if you compare to our neighbouring countries like Singapore, Hong Kong, Thailand, and even Vietnam, right, their property price in the city centre, if you convert back to ringgit Malaysia, right, it's easily 2 to 3 times than 2,000 ringgit per square feet. It can go up to 3,000, 4,000, 5,000 ringgit per square feet. So I would say it's still affordable for Malaysians to buy properties in city centre or in KL. And overall shares as well is still quite undervalued because our economy is still not yet recovered. So my take is, if you have extra cash, do learn to invest. Start early if you are young, and average down if your shares is losing money. It's a long-term game. It's never a short-term game. So I think that's all for my sharing today. If you like it, do subscribe and share. And if you have any comments, just write it down and I'll respond accordingly. Thank you so much for your time, and I'll see you in my next video. Bye.